Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is May 2nd, 2025, and we're diving into Dexcom's first quarter earnings report for 2025. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Dexcom has been a leader in glucose monitoring technology, and their latest earnings report provides some interesting insights into their performance and strategic direction.
Revenue and profitability overview. Let's start with the top line. Dexcom reported a revenue of $1.036 billion for the first quarter of 2025, marking a 12% year-over-year increase. John, what are the key drivers behind this growth?
Dexcom's revenue growth is primarily driven by a 15% increase in U.S. sales and a 7% rise in international markets. The company has expanded its coverage in the U.S. and launched new distribution channels, such as their presence on Amazon, which has contributed to this growth.
And how about their profitability?
On the profitability front, Dexcom reported a GAAP operating income of $133.7 million, which is 12.9% of their revenue. Their non-GAAP operating income was slightly higher at $143.1 million, or 13.8% of revenue. This indicates a solid operational performance, although there was a slight decrease in non-GAAP operating margin compared to last year.
EPS performance and analyst expectations. Now let's talk about earnings per share. Analysts were forecasting an EPS of 33 cents, but Dexcom reported an adjusted EPS of 32 cents. How should investors interpret this?
While the adjusted EPS of 32 cents slightly missed the forecast of 33, it's important to note that the company maintained its EPS from the previous year. The GAAP EPS came in at 27 cents, reflecting some non-recurring costs and adjustments. Overall, the EPS performance is stable, but slightly below expectations.
Strategic initiatives and future outlook. Dexcom has announced some strategic initiatives, including the FDA clearance for their Dexcom G7 15-day system. How does this impact their future outlook?
The FDA clearance is a significant milestone for Dexcom, as it allows them to expand their product portfolio and potentially capture a larger market share. Additionally, the $750 million share repurchase program demonstrates confidence in their financial health and commitment to returning value to shareholders.
And what about their guidance for the rest of the year?
Dexcom has reiterated their revenue guidance of $4.60 billion for 2025, which represents a 14% growth. They also expect a non-GAAP gross profit margin of approximately 62%, despite some near-term supply challenges. This guidance reflects a strong growth trajectory and operational resilience.
Key takeaways. In summary, Dexcom has delivered a solid first quarter with strong revenue growth and strategic advancements. Despite a slight miss on EPS expectations, the company's future outlook remains positive with new product launches and a robust share repurchase program. John, any final thoughts?
Dexcom is well-positioned for continued growth, especially with their innovative product pipeline and strategic initiatives. Investors should keep an eye on their execution in the coming quarters.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Dexcom's performance in the comments below.